When filing taxes, cannabis cultivators have a major decision to make when faced with the question, will they be filing 940, 941, or 943 forms for payroll? The differences between these forms appear minor, but if the wrong form is checked, there can be significant and lasting consequences. In the following, we will explain the differences between the forms and what you can do to avoid any issues. The forms we'll cover today include Form 940, Employer's Annual Federal Unemployment Tax Return, Form 941, Employer's Quarterly Federal Tax Return, and Form 943, Employer's Annual Federal Tax Return for agricultural employees. Before we dive in, be sure to like this video and follow us for more cannabis news and updates. As always, the information contained in this presentation is meant for guidance purposes only and not as professional legal or tax advice. Further, it does not give personalized legal, tax, investment, or any business advice in general. Form 940 is for federal unemployment tax, which is filed once a year, but deposits are made quarterly through the electronic federal tax payment system. If your business files Form 940, it will also file Form 941. There are a lot of factors that determine the unemployment rate of your business. For example, if you run a high turnover business like construction, your unemployment rate will be higher because you have more frequent employee changes and higher injury risks compared to a typical office business owner. For an average business, the unemployment rate runs from about 2 to 3%. At the end of the year, there is a federal unemployment tax rate of 0.006%. All of the payroll wages you have paid from January 1st to December 31st, up to $7,000 will be taxed. For example, if you have 4 employees that you have paid $20,000 each, only the $7,000 multiplied by 4 employees will be taxed. Some states have a different unemployment tax rate if they have taken out bonds from the federal government. California is one of these states. Their unemployment tax rate is higher at 0.021% because they have not paid back their federal bond. The federal government is getting their money back by imposing a higher unemployment tax rate on businesses located in California. Every business files Form 940 annually, on or before January 31st for the previous tax year. Now, let's get to know Form 941. Form 941 serves 2 purposes. The first is to report income taxes, Social Security tax, or Medicare tax withheld from employees' paychecks. And the second is to pay the employer's portion of Social Security or Medicare tax. This form is filed every quarter, January through March, April through June, July through September, and October through December. Again, if your business is filing Form 941, you must also file Form 940. 95% of business owners will file Form 941. Those who are self-employed, like single-member LLCs, are often shocked at the tax rate, FICA and Medicare, which is 15.3%, because they are technically paying double for their employee, themselves, and then again as their employer, themselves, who must match the same amount. This is one reason why optimal structuring from a tax perspective is so important for cannabis businesses. And finally, let's get to know Form 943. Form 943 is similar to Form 941, but is exclusively for agricultural employees. 2 major differences are, if you file Form 943, you do not need to also file Form 940. Form 943 is filed annually, not quarterly like 941. The final and biggest difference is that Form 943 can only be filed from operations that are completely agricultural cultivation. If you have anyone who is a part of the business, working in an office, doing janitorial work, etc., then those workers are disqualified to be considered in Form 943. Instead, you must file 941 and 940. If you cannot meet the test and prove that all employees are actually out there with their hands in the ground, you cannot file Form 943 for employees. All tax rates for 941 and 943 are exactly the same. Many cultivators prefer to file annually if they can prove that they are eligible for Form 943. The caveat here is that the entire business must be involved in the actual farming of cannabis. Payroll tax forms are one of the many tax accounting items that seem like a troublesome bore to cannabis operators. But if you don't pay close attention to items like this, you'll end up paying in the future, as the IRS can issue serious penalties for non-compliance. We at Green Growth specialize in preparing and filing every cannabis tax form, so you can rest easy knowing you're not over or underpaying, and everything is compliant. If you're ever unsure about which tax forms apply to you, or if your business is structured optimally from a tax perspective, please reach out to us today at 1-800-674 888-9050 or at greengrowthcpas.com. I'm Chris Ryan, and as always, it is my pleasure to bring you the cannabis news. Thank you for your time. We hope this information has been helpful. If you have any questions or want information, please leave us a comment below, and be sure to like this video and give us a follow to learn more about the cannabis industry.